Welcome to Business Middle East. This week we take a look at global markets performance ahead of the US interest rate decision. With the countdown underway to the keenly awaited Federal Reserve Bank meeting, tension is mounting in global and MENA markets, stirring currencies, commodities and stocks. Since the beginning of this year, Janet Yellen has been promising a rate hike. However, the decision has been postponed several times, which significantly affects markets. Now, with hours to go before the decision, which could be a turning point for global markets, many questions have been raised about the Fed's options. Before we discuss that, let's take a look at the markets.
There's been tons of pressure on currency markets pending the Fed's decision. Over the past 2 weeks, concerns over market volatility caused the US dollar to drop around 3% against the international currency basket. Last week, against the dollar, the yuan fell to its lowest level in 4.5 years, losing 1.8% of its value following comments by the People's Bank of China. European stocks declined to their lowest level in about 2 months. Germany's DAX lost 8.24%, while the UK FTSE slipped 6%. Meanwhile, across the Atlantic on Wall Street, the week ended in red. The S&P 500 hit 3.96, its lowest figure since October, while the Dow Jones lost nearly 3.5%. In the commodity market, crude oil prices sank to their lowest level for 7 years. Brent crude dropped by more than 5% and the WTI by 2.8%. There was a similar situation in the Middle East, where stocks plummeted too. Since the start of the month, the performance of the Arab markets has been spiralling downwards. Here's a look at how the MENA market has performed over the last 2 weeks. Dubai has dropped 10%, while Saudi Arabia, Abu Dhabi and Kuwait are well into negative territory. According to analysts, the decline in oil prices and the Federal Reserve's pending decision are creating uncertainty among regional and international investors in MENA.
To discuss market trends, joining us as usual is Nour Eldeen Al-Hammoury, Chief Market Strategist at ADS Securities. Nour, let's start with currency. We've seen a decline in the dollar against most of the global basket of currencies except the yuan. What are the implications of a low yuan now?
A decline of the yuan might be an indirect message to the Federal Reserve not to raise rates this week. China may start devaluing its currency faster than before in order to increase its goods competitiveness to support its trade balance surplus, which eased notably recently. Moreover, I would like to point out here that the Japanese yen, which we kept on mentioning in the past few weeks, remains a safe haven investment, and the US dollar Japanese yen declined sharply to a level of almost 120, and we're still favouring such currency.
Last week, oil dropped sharply, as well as stock markets. How will the Fed's meeting affect commodities and stocks?
As we noticed throughout the year, when the Federal Reserve meeting approaches, the market starts to decline sharply, as the estimates were higher for a rate hike in every meeting. In return, global markets tumble, including stocks and commodities. We saw how oil declined sharply side by side with equities, and even the dollar declined. This is a sign that traders might be liquidating their positions and staying away from the market ahead of the Federal Reserve's uncertain decision.
A wave of decline also dominated the stock market in the Middle East. Of course, here oil plays an important role. Are there other factors?
One of the reasons, of course, is oil. Brent crude closed below $40 for the first time in years. And the news about imposing value-added tax in the region had a notable impact on equities. Declining global equities, which also weighed on MENA equities across the board, in addition to the fears from the Federal Reserve potential rate hike this week.
One last question, Nour. Based on the US economic figures, what are the options today for the Fed interest rate? What do you expect?
Well, we have 3 scenarios for this decision. The first one is to raise the Fed fund rate by 25 basis points with a dovish tone about future hikes, for example. The Fed might say that they will wait for a considerable time to see the impact of the first rate hike before considering raising or even cutting rates again. This is the most probable scenario for us, which won't help the US dollar even if they raise the rate. The second scenario is to keep the current policy on hold and to delay the rate hike again. However, this will hit the Federal Reserve's credibility. Therefore, we think the Fed will try to avoid it. The third scenario, which we don't think is possible, the Fed may raise rates, which will lead to a spike in the US dollar across the board. However, the Federal Reserve does not want a strong dollar.
Thanks for joining us, Nour. That's all for now. You can share your thoughts on Euronews Facebook and Twitter using #BusinessMiddleEast. Thanks for watching. See you next week.